Boom. Alright, what's up you guys? It's Royce Jacob. Welcome back to the channel. As you guys know, I'm currently on vacation, about to head up to the snow right after this actually. But I wanted to hop on quick and talk to you guys about what is going on in the markets. It's been a crazy week so far. These past few days have been extremely volatile for both the crypto markets as well as growth sectors of the equity markets. The primary reason for this, at least what a lot of people are attributing this volatility to, is the FOMC meeting that is occurring today. It is Wednesday, December 15th at the time of recording, or where the Fed sits down, Uncle Jerome sits down and determines when and if they will raise interest rates, okay? So that is definitely stirring the pot within the markets. I want to talk to you guys about the crypto markets primarily just because they're seeing a lot more volatility. We're not going to cover any equities today, but we will talk macro. The primary purpose of this is to talk macro, remind ourselves of the fundamentals, and just quickly look at a few charts with you guys, tell you what I'm currently thinking about price action on a few of the bigger names within the crypto markets, okay? Or at least the relevant ones to this channel. All right, so let's get into it, you guys. Before we do, I do want to read the intro to this morning's newsletter that I just finished sending out just because it sums up my thoughts on the macro, okay? So instead of ranting, I will be repeating a few of the things that I just said, but let's read over this, solidify at least my thoughts on the macro, and let you guys know what I think about the overall environment right now, okay? So tis the season. Tis a wacky Wednesday in the markets, and many growth investors are continuing to solidify their losses across the board. The Federal Open Market Committee, or FOMC meeting, is today. This is where Uncle Jerome and the Federal Reserve address if and when they'll be hiking rates. Remember, rate hikes, good for the dollar, bad for everything that trades against the dollar, which is pretty much everything. I personally believe the panic that this is creating within the markets is significantly overblown, and this is primarily just tax loss harvesting, as I've been saying for the past week. Unless the Fed decides to raise rates today, then any announcements that they make can't be too far off from what anyone who actually has a pulse on the macro has been expecting. Okay, so you guys, this has been in the cards forever. Rate hikes have been inevitable over time, okay? It's been widely known across the markets. If you read any financial news media publication, you've known that the rate hike is coming, and it's likely coming. I mean, most money is on the fact that it's going to be coming in mid-2022. So unless they say today that they're going to raise rate, like they come out today and they say they're going to raise rates right now, then that kind of justifies the volatility that we're seeing in the markets. But if it's exactly what everyone's been thinking, even if it's late spring, they want to choose to start raising rates, then I mean, nothing is really out of the realm of what people have already been expecting. So that's why it's surprising me that so many people think this is the reason. And again, sometimes the markets, especially considering we're currently in such an emotional market environment, it's important to remember that it's not the effect of what happens. It's what investors think the effect of what happens will be. Okay, so this is a game of chess, you guys, and you have to play that psychological game sometimes because this is a very cerebral game, okay? But anyway, to sum this up, I'm not stressing personally. After the past couple of weeks of carnage, these pullbacks are just scratching the callus. Don't get me wrong, it sucks to see your net worth declining day by day, but at times like these, it's important to keep your eyes on the prize and focus on the long game. Remind yourself of the fundamentals that made you bullish on your favorite names in the first place. The remainder of 2021 may not be all that exciting, but I'm absolutely pumped for what 2022 has to offer. We'll come back to you. We always do. All right, so again, 2021 tax loss harvesting is still in full effect. I can't say that I haven't been a victim of doing the same. I've been getting absolutely smoked in the portfolio, but again, you guys, that's the game we're playing. That's okay. And ultimately, you guys, the hard times build characters. Builds character as a trader. You will experience times like this many more times in your life if you do want to play this game, and that's very important to remember. And remember the feeling, because it feels bad, and you can remember again, it's good to feel bad sometimes, all right? It helps you to try to avoid that feeling moving into the future, okay? So that's TED Talk right there. If you guys want one of these bad boys in your email inbox, you guys know the drill. Every trading day, you want to know how I'm personally trading. You want kind of daily updates because, once again, I'm on vacay. Been sending out the newsletters. Not sure when I'm going to send out a video because, again, I am heading up to the mountains right now. But first link down below, 15 bones a month, 40 bones for every 3 months. Again, means a lot if you guys check that out. And yeah, that's that. Let's hop into the charts real quick and talk a few names and call it a day. All right. So Bitcoin, not looking good, you guys. We are still below resistance on the downtrend from Bitcoin's all-time high on November 10th. Very textbook series of lower highs and lower lows on the daily candles right now. Of course, volume looking a little low. And at this point, you guys, it's pretty damn hard not to be bullish on Bitcoin. Now, when you look at this chart right here, okay, this from a more macro perspective, I guess right here, kicking it off July, okay, at the end of summer, this right here is still technically a series of lower highs and lower lows, which I do think is kind of why Bitcoin is outperforming Ethereum and altcoins at the moment. Again, a lot of hyper growth sectors are getting in the equity markets, the NASDAQ, the Russell 2000, tech stocks that have been ripping so hard. Again, the higher you climb, the harder you fall. That's just the nature of the markets and physics, okay? Physics with market physics. Anyway, as you zoom out here, you can see that we are still setting a series of lower highs and lower lows. So what I'm actually liking to see right here is that we are finding kind of a base around this area. Like, we have been correcting. We are still short term from like in this area right here, still setting a series of lower highs and lower lows, but it's pretty sideways. Like, this doesn't look all that volatile, at least what we've seen over the past week or so, right? Especially relative to everything else in the markets. So I do like to see that. Bitcoin does kind of look like it's basing out. Bitcoin king of the crypto markets. So that's good. If Bitcoin does, Bitcoin's actually like the Apple of the crypto markets, right? So if you look at the equity markets, Apple is scratching $3 trillion right now. And that is because everyone's just finding Apple as like a safe haven. Apple is the new safe haven, which is crazy to say, but that's the reality. So as capital flows out of riskier assets, more risk on assets, again, in this case, like Ether, Mana, Sands, altcoins, that capital will find a home in Bitcoin because people still want to put their capital to work. People still want to invest in a sector they love. In this case, it's crypto. But it is hard to, for a lot of individuals who bought, again, say you bought Mana at like $6, you just lost 50%. That's hard. And again, that might be a lot for especially newer investors to stomach. And that's okay. But that's just the rationale. That's just the logic that I think a lot of people are experiencing right now. Again, divesting from more risky assets, still investing in a sector they love, and maybe finding safety, in this case Bitcoin, maybe even Ether. Okay, so Bitcoin series of lower highs and lower lows. I do like to see that we're basing out. It doesn't make sense to me for Bitcoin at this point because, again, the fundamentals are still unchanged. Inflation is still running extremely hot. Even if the Fed does start raising rates, tapering bond purchases, the dollar is still, we are still in a very inflationary environment, okay? And that's important to understand. But also an inflationary environment does kind of create demand for dollars. You can kind of make that argument as well. But anyway, Bitcoin, it just doesn't make sense to me. There's mass adoption. This is international. This is way too significant to the global financial system at this point. And it just doesn't make sense to me from a market cap perspective, from a global value perspective, for us to fall below 40K. Also pretty significant psychological even. But I do think that we could also be setting a series of this could just be us basing out. And we do trade within this range. As I was saying, I think last week I was saying, we'll trade kind of within this range. It's a massive range, but that makes sense to me. Trade within this range from, unless we do see 40K, which wouldn't surprise me either, maybe double bottom out right here. It does look like we do want to trade sideways here just to kind of base out, create this higher low on the overall uptrend. And once 2022 kicks off, maybe head back to the races, okay? So Bitcoin, Ether, then we'll close it out with Miss Mana Moon, okay? So Ether, I actually want to go to the 4 hour here, and this was very satisfying, okay? I think I talked about this in the Sunday Stock Watch. So right here, Ether came to almost perfectly test the exact pinnacle of many trend lines, which is very satisfying to see. So again, you guys, the stick figures, it may seem weird to, if you just started watching these videos or something, like stick figures, a lot of people use MAs and a lot of other indicators. And I do as well, but dude, you guys, the stick figures have proven to be so much more effective than so many indicators that I've used in the past. And that's why I continue to use them to this day. Anyway, Ether did come to test the apex of multiple different short and longer term trend lines. Satisfying to see. Was hoping for a breakout. Obviously, we broke to the downside. Ether is in a much, much more textbook downtrend. So if we move that out of the way, you can just see what downtrend we're currently in right here. This is the line of resistance. Still below resistance. Textbook series of lower highs and lower lows here. Ether, I do think has more potential to correct again because it is more risk on. It did see more a greater rally than Bitcoin did over the past couple of months. So it wouldn't surprise me, you guys, if Ether came down here. So downside price target for Ether is going to be down here. I think this wouldn't surprise me at all, and this would actually excite me because this is where I'd be looking to actually buy more Ether or convert US dollars into ETH. And that would be to test this previous ceiling over here. Previous ceiling becomes a new floor. Again, still kind of setting, as we were saying, this higher low on this overall uptrend on the longer term series of higher highs and higher lows. And that would take us to about $3,200. Okay, so downside price target for ETH is going to be $3,200 with this volatility that we're currently seeing. My money is definitely on 3,200. My money is on more downside than upside. 4-hour Stokes also just curling to the downside. I believe Bitcoin's daily Stokes are about to curl down too. So yeah, Ether, I do think 3,200 is probably in the cards, but hey, corrections present opportunities. You guys know the rules. And yeah, I'm honestly kind of excited if we do see that. Close it out with Mana. So Mana losing a lot of volume, floating around $3. Getting it actually did dip into my buy range. I didn't buy any yet. I did say that I would buy Mana anywhere below $3. And right now we are at $3. But hey, if we fall lower, might have to hop on that advantage. I mean, even here, you guys, if I didn't have such a significant Mana position already, I would definitely be a buyer here because, as you guys know, double digits. I think double digits in 2022 are pretty much inevitable. The metaverse trend is here and it's here to stay. Okay, might be a little hype right now. NFTs, everything, the metaverse, etc., etc. Might be hype, but you guys, this is still the first wave. And as I said in a previous video, I can't remember how long ago exactly it was, what Bitcoin and Ethereum were in 2017, 2018, I do think Mana Sand is in 2022. Okay, so I do think 2022 will still be huge. Q1, if things pick back up, because again, tax loss harvesting is very, very real. Okay, people are capitalizing losses, reducing the check they have to cut to Uncle Sam when tax season comes around, when you got to send in those taxes. So once things pick back up, once risk appetite is back on, and I do think once again that will come in Q1 2022 because the fundamentals are unchanged. There's just a lot of fear in the air. I remain bullish on Mana. I remain bullish on Sand. And when it comes to the short term, it just doesn't make sense for us to fall below. I will say this low over here from the kind of the base of the first wave. It doesn't make any sense for us to go anywhere below $2.40. Yeah, but in my mind, it makes sense that we're basing out around here. Again, this kind of bounce high right here has acted as a ceiling floor in the past. $3, obviously a very significant psychological even. So if we go lower, hey, great buying opportunity. It doesn't make sense for us to fall much lower because, again, Mana is still the face of the crypto metaverse. That is the trend. That is the ticker symbol to play. More accessible than Sand as well for the moment at least. And yeah, I'm very excited for what Q1 of 2022 has to offer. All right. We'll cross those bridges when we get to it. I can't, we really have to see how this Fed meeting plays out and how the next few days, how we close out this week. Going into Christmas too, you guys, it's just volatile times. Again, the holiday season, as we've been saying, as we're coming into it, is exceptionally volatile. And again, volatility works both ways. And unfortunately, for the moment, the volatility has been working against us, not in our favor, but that's the nature of the game, you guys. That is the nature of the beast. And again, that's okay, you guys. Just learn from experiences like these, and they will come in handy in the future, okay? If anything, it builds those calluses. It creates for a strong stomach, all right? So we'll call it there, you guys. I hope you have a great rest of your week. I probably won't be posting a video at least until this weekend. So I'll catch you guys then. Stay safe. Hope you guys are getting that Christmas shopping done. Let me know in the comments down below what you think about anything we talked about today, and I look forward to catching you guys downstairs, okay? So, as always, take action, make waves. Peace, guys.